Bitcoin just pumped from 68K up to 73.5, and everyone's calling it a reversal, but we're currently on day 5 after the death cross. What death cross? It's the 3-day death cross or the triple death cross. There's a pattern that happens between day 5 and day 12 that most traders don't even know about. The pump isn't a surprise, it's a textbook. Let me show you what happens next. Today is Wednesday. These are 3-day candles. So that 1, 2, 3, Friday, Saturday, Sunday, Monday, Tuesday, Wednesday, that was 5 days ago. So we have 3.5 days, which is 5 days. We're in this candle now. And so technically 5 days ago. So let's just go back to the previous one just to give you an idea of how similar this is. Not saying the same thing's going to happen, but it's very similar. The timing is just crazy. So here's the cross. And after the cross, as you can see, we had big pump, big solid green candle right up to the top. Pumps up after the cross before the big dump. That's interesting, right? So like if we go back to the last one, here's the cross. If I just put my mouse there, you see the dotted line going down to about here, right when it crossed. And it wasn't until 3, 6, 9, 12 days, or between the 9th day and the 12th day, where we had this big pump back up before a huge drop down. And that was between 9 and 12 days after the cross. Well, before that, we started to drop before the cross. And then the cross happened right here on this candle. And then 3 days later, it dropped. And then 3 days later, 3 days later, 3 days later, 3 days later, so on and so forth, a total of 30 days to the bottom. Almost the same amount of days after. There was the cross, this candle right here, 1, 2, 3, 4, 5, 6, 7, 8, 9. On the 9th day, 10, 11, 12. So the 9th day to the 12th day, we had a big candle. Right now, it's the 4th and 5th day after the cross, this candle. And I'm not saying it's going to be the same. I'm just pointing out the similarities. Sometimes these things are like big fake outs. And what do they come up to? It's interesting when they actually do come up to, when you do see them come up like that. Let's just draw a line where that wick hit and just bring it over. I mean, we do have major support here before we fell below it and retested. Right here, Bitcoin also bull flag up against major resistance at the 68 to 70K zone. If it breaks to the upside, could bring it to the 73.5 level. However, bull flags tend to break down when up against major resistance. I'm still short, but there is a chance for an uptick here. That's what it looked like at the time. I had the line drawn. That's where it would go if it broke. It did kind of waffle around here for a little while before it finally broke out, but that's where we're at right now. Where is it? It's right at the 73.393 at the moment. And look at this zone that I have here. This is a price zone between 70,500 and 73.5. That's where we came down all the way down to support here before finally breaking through. I mean, it would literally have to hold above 70. So in other words, I would say on the daily time frame, so for the next 24 hours, it would need to not come back down below 70. If it comes back down or it stays above 70, bounces at 70, comes back up, gets above 73.5 and gets above 74, that's a whole nother story right there. That's something that not really would expect. But if we zoom out and see where we really are in the grand scheme of things, we are in the downward trending channel still. My liquidation is too close. I allowed this to happen. I could have got out. I should have left my stop loss. I think it was at 71. I could have left it because I really just thought we were going to wick up to this zone and then come back down. And it did wick up a little higher. I mean, I did see the liquidity up there at 73.5 because I did post it 2 days ago that we could pop up there, and we did, and we wicked right up and got it come back down a little bit. So we could come back down into the 70K zone down here and just go sideways. I think maybe up and down and sideways in this zone for a little while. I am holding at the moment. That is risky, guys. I'm not teaching you to do that. I should have had a stop loss much tighter on my entry, but I also added contracts on this pump. As soon as we got right to about here, you can't see it on this chart on this candle, but if I go to the lower time frame, go to the 4 hour on this pump right here, this long wick right here, I added more contracts. What I would say is on the example you just gave, where I was talking about turning one Bitcoin into 20 in the next bull market, that would be what you waiting for the bottom and us really confirming that we think that is the bottom finally. And then you go along with, let's say your Bitcoin, your one Bitcoin right down here. This would be considered the 1 year mark right here, 365 days. From the top. We're kind of far away from it. We're at currently, 149 days. So we got like 200 more days for the 1 year mark. And the only reason the 1 year mark is important because even the best analysts in the world, the traders at Fidelity, the trader at some of the biggest companies agree with the 1 year mark. It's a 4-year cycle until it's not. So it's 3 years up and 1 year down. That's just the way it's been. Till it's not, it is still. If this cycle is different and this pumps up and we break a new high before the year is up, then this is no longer the cycle. It's no longer valid. And it is possible that it's over and we just don't know it yet. So if you want to learn the complete strategy for trading bear market patterns like this, when to enter, when to exit, how to position yourself at the bottom, I'm doing a free live masterclass this week. The link is in the description and I'll show you exactly how to prepare for day 33. Let's get back to the chart. In a downward trending channel, the pumps are usually temporary. It's better to short the tops than the bottoms, in my opinion. That's just my opinion. There are people that will disagree with me. So this has happened multiple times, even in the downward trend. That was still in bull market territory in the downward trend here. So we got right here, we pumped from 85 to 94. That's almost $9,000. This pump back up from this drop right here was from 60 all the way back up to 71. That's a $10,000 pump. This happens. I think because we're just stagnant for so long, we get excited about it when it happens. But this blued out zone that I have here, this is a major support and resistance zone. And yes, if we got above it, that would change something. That would mean something. But over here on the way down, we hit this bottom right here. And it wasn't a bottom at the moment because there was no double bottom yet. There was no second touch point. So, but here, when it hit this and then all the way over to here, I could then draw a line from the top to there. But until that changes, until that happens, I can't bet on that because that's never happened before. Always been a year. And it's always been 33 days. It's not even me making this up. It's just the charts and the history of the charts. It's just me reading them to you is all. It's not necessarily a thesis that I created out of thin air. Getting back through it right now would not seem normal because it's just too premature in the typical bear market cycle, but things could be different this time, as I keep saying. This pump to 73.5 on day 5 is exactly what happened in 2022, in 2018, and even in 2015. It's not a reversal. It's the pump before the final dump. Day 33 is March 29th to about April 1st, and that's when history says the bottom comes. If you want the complete playbook for how to trade this pattern, position yourself for the bottom to get ready for the next pump to the upside, prepare for that next bull market, join my free webinar this week. I'll walk you through the entire strategy step by step. The link is in the description. I will see you on the inside.